Have you noticed a pattern in your life? You keep going back to the same moves and feel like you're a little bit stuck? Well, if you are, and if you're wondering what else could be out there that you might be missing out on, well, we want to spice things up a little bit today and discuss some new and exciting ways to use your money, no matter the size of it. So essentially, what we were trying to do here is answer a question that we get quite a bit, which is, I've got some money in savings and what should I do with it?
Yes, because there are times where people have been doing a great job. They're saving, they're really focused, and then they get to a point where they're going, man, it feels like I have a lot in savings. Now what?
Right.
So it's always good to get to that next step, and we want to make sure that you're prepared for it and you make wise choices with what you've got.
Yeah. So just to kind of set things up a little bit here, what I've noticed a little bit, and I mean, you can definitely speak to this, is that over the past few years, right, we've had some pretty significant headwinds, right? Some pretty big obstacles, the pandemic. And then over the past, year and a few months, we've been experiencing some high inflation, right? And so that's coming off of this long period of very cheap money, right? Where people have been doing really well in their investments, have been, borrowing money at a very low rate, right? And being able to invest all that money, right? And so for a lot of folks, that's left them with some cash. And now that, the inflation is high, interest rates are high, they have some cash left over and they're saying, okay, well, it's not, the stock market's not doing great right now. Interest rates are up. So, buying a house or, investing in other things doesn't look great. So where do I put my money? Is that, that sound about kind of like what you're
we're
saying?
getting that a lot. And a lot of people, there's really nowhere to hide in the market right now. It's doing better now. Granted, it's recovered some, but it's not like you're going to be able to put something in something that's a sure thing, which the market's never been that way, but it sure has felt that way.
Right.
And then recent volatility has woken people up to the fact that the market is a volatile thing and has to be treated with respect.
Yeah. So, and what I'm seeing, there's a few opportunities, right, and a few things that we think that you should be looking to do, right? Some habits to do, and then some habits to not do, right? So we're going to be talking a little bit about that. And Teresa, kind of what are some of the things that you've seen people do that you typically say, okay, maybe let's pull back on this.
One of the big ones is keeping more cash than you need. You certainly need to keep an emergency fund, 6 to 12 months of your income, depending on how variable your income is, or your expenses, not your income, which is a misnomer. A lot of people think emergency savings is based on my gross income, but it's actually based on what you need to spend each month. But if you've got additional funds that are not emergency savings or don't have an earmarked purpose, there are a lot of things you could be doing with it other than just sticking it in an account.
Yeah, no, I completely agree. I've seen that quite a bit. I've kind of wrestled with that concept myself, right? To figure out what is that right amount, to keep in there. And, for me, I think I've kind of gotten to that point where I understand my expenses. Things kind of change from time to time.
Yeah.
And, I've got a few side gigs as well. So, that kind of plays into it as well because I've got to figure out those expenses. So that's been really, really interesting to kind of, figure out there. But exactly what you said is as far as having a good concept of what your emergency fund should be based on those required expenses.
And the kind of flip side of interest rates being higher is that you can also get higher interest on short-term investments. So like CDs at your bank, many of them are providing a pretty reasonable, kind of attractive interest rate if you're looking for something to kind of sock it away for 6 months to a year without needing it. So make sure it's not your emergency fund, but those funds over and above it, that's a kind of an alternative that you could look at that maybe wasn't as attractive a year ago.
Yeah. So we were seeing this really interesting kind of, thing happening in the market, right? That we don't typically see. And that's because of the Fed increasing those short-term interest rates, right? So they increase the Fed rate, right? And that has a really big impact on short-term rates. So basically what we're seeing is that those rates that the people can get on CDs, on bonds, for 3, 6, 12 months, they're pretty much the same, pretty close to what you could get if you were borrowing or, saving in a longer term investment, right? A bond, like a 5 or a 10-year bond, right?
Yes. So those shorter term investments are actually more attractive interest rates.
Yeah.
And you don't have to lock up your money for a long time.
Exactly.
So that's an alternative to keeping too much cash. Another thing that we talked about was buying what are called depreciating assets.
Yeah.
So if you've got surplus cash, don't necessarily go out and buy those toys that you've been considering
Right.
if you don't need them.
Yeah. If they're not making you money, right, then they're losing you money, right? Because it's expenses, it's registration fees, it's fuel, it's maintenance, all the things, right? As soon as you drive the car off the lot, it depreciates. So yeah, if it's not making you money, then it's probably just money that's sitting there not just depreciating. Yeah.
And then the other thing you want to be cautious of, especially with inflation where it is raising your standard of living as your income increases. We call it lifestyle inflation a lot of times, but if you're constantly chasing spending every dollar you make, then you're setting yourself up not to have the surplus that you need to work on your other goals.
Right. Yeah. So if you're looking at your goals and trying to figure out, where all your money is going, right? Because that's I see a lot of people kind of get hung up on that. They make good money and they're constantly feeling like they're falling short, right? And typically that is the main perpetrator right there is lifestyle inflation.
And it's some things are worth it. Okay, let's just be real. We're not going to tell you never go to Starbucks if that's what you like. Although I would say if you're local, 7 Brew's better. But whatever. But there have been studies done, and one of them was done by Lending Club in 2022, and it showed that more than half of Americans making between $100,000 to $150,000 are still living paycheck to paycheck. So think about those things that you do spend your money on and ask yourself, is this worth it? Do you need this item or is it bringing joy to your life? If it is, then it's probably worth it. But if it's not, maybe it's time to take some changes to work towards your other goals.
Yeah. And I'm just curious, how often do you see that just in your practice as far as, folks that make good money, but they on paper and whenever they get their balances, it's kind of a shocking thing to see they're living paycheck to paycheck.
Yes, it's something that shocked me when I entered this industry, honestly. When I started working with clients, I expected it to be the doctors, the lawyers, the accountants that were coming in with these huge bank account or savings accounts. It is almost always your average Joe. That's what's been so shocking. The linemen at Energy are the ones that retire with these huge balances typically. And it's because they've learned to live below their means and they've had this lifestyle of saving throughout their lifetime.
Yeah.
So
that's so true. That's very true. I was having dinner with this doctor, a friend of mine, the other night, and that's one of the things that we were talking about. And one of the things that I think we are trying to do a better job of as far as the financial industry. And when we see, folks like doctors, right, or like lawyers that don't specialize, they don't know a whole lot about finances, so they seem to be almost like a perfect target for folks that play themselves or pretend to be professionals in finance or that kind of thing, and sometimes it's easy for them to kind of get carried away with your sales pitch of whatever permanent life insurance or whatever
the product they're going to be sold is the magical product for them. Yes.
Right.
Yes.
So so it's really staggering, but it's definitely something that we want to make sure that folks know, okay, if lifestyle inflation and if, making sure that you're not, just spending every dollar that you're making sure that you are working towards your goals, right, then that's definitely something to look out for.
And that might be another thing to add to this. We had 3 items listed as our don'ts, but maybe another don't is don't go without goals. Yeah. If you haven't taken time to sit and create what you want your future to look like, and it doesn't have to be every detail, but at least a broad idea of what you want to achieve, go ahead and do that because it'll help you make your day-to-day decisions. So we've talked about the things we don't want to do when we have that surplus cash. What are some things that we should do?
Yeah. So one of the things that we want to make sure that folks do, kind of in line with what you just said, making sure that you've got goals, right, is making sure that you have room in your budget, that you set aside funds for things that you enjoy, right? So like you said, it's not about cutting everything out, right? Something that I think a lot of folks, whenever I meet with them and, we go over their findings as far as, their financials, and I present to them, okay, this is what the things that you should do to help achieve your goals, right? And something that I think they find quite exciting is the conversation that you should have room in your budget. You should set aside some money to do things that you enjoy, and it shouldn't be like it's not like an on-off switch, right? Where it's like, okay, now you went from having all this fun to like no fun at all. It's like, okay, that's just not sustainable.
Correct.
And most folks just can't do that.
It's just like dieting. If you decide that you're going to go on a diet and all you're going to eat is XYZ, you're going to set yourself up for failure. Yeah. And your finances are the same. You need to have a good plan for the good stuff, for the fun stuff. Now, you may have to pare it back for a while if you've kind of built a bit of debt or something like that. But even then, you should have small rewards and small moments of joy that you're providing yourself. Even if that means you get to have that coffee, if you make it through your budget without overspending, you get to go have that coffee that you love to have, or you get to go get your nails done, whatever it is that you like.
Yeah. Yeah, the concept there is plan it and do it guilt-free.
I think we call it planned spontaneity a lot of times on the radio program. Another thing is allocate other funds, according to the time you see yourself using them. So think of it this way. With investing, this is really, really important. If I have money that I want to set aside for a goal, but that goal is only 6 months away, I shouldn't treat it the same as a goal that is 6 years away or 16 years away. It has to be utilized based on when I plan to use it or invest it or planned for based on that timeline.
Yeah, exactly. So we do it actually a lot whenever we do our retirement planning, right? So the further out that we see somebody using a certain amount of funds, we're going to invest it very differently than we do, the funds that they're going to need next year or 6 months from now.
And there's times where we tell people, don't put it anywhere but the bank. Because if you don't need to take on risk for the timeline, then we don't want to do that in general. And think about big expenses. Think about your routine expenses. A lot of people forget. I joke and make fun of myself that sometimes it feels like Christmas snuck up on me simply because I forgot to put enough money aside. There are a lot of things that are coming in your life financially. So take the time to plan for those so that they don't kind of slap you in the face when they arrive.
That's right. Yeah. And that just the whole point about you plan differently, whether if it's like a routine expense versus, kind of a bigger expense. So, we like to, and a lot of times when we were going through like just problems that we're trying to solve here, at Gen Wealth, we talk about, if you had a big amount, like an amount of sand, right, and then some bigger gravel, and then some rocks, right, and if you were trying to fit them all into a jar, right, how it'd be really difficult to just do it unorganized, right? But there's a certain way to do it where it all fits in correctly.
It's about having the right strategy.
Right.
And I think often people go through life without a strategy, especially when it comes to retirement savings. You start your job, right? You get your packet, you fill it out, you get it back to HR, you have no clue what you've just picked out. You just know you're adding money. But think about what it would be like if you had a plan and a strategy for that.
Yeah.
I think last year really kind of was a bit of a gut check for people, because if you had a strategy and you knew what your investment was doing, then when the market dipped, especially if you were younger, you were going, all right, I just bought shares on sale.
That's right.
But if you just watch that balance and you don't have a strategy and you see that balance dipping, it gives you a little bit of a gut check of whether you're focused or not, because you don't want to panic if you've got 25 years.
That's right.
Now, even at retirement, you don't need all the money right away, but if you're closer, there were different steps you need to take. So it's really critical that you have that strategy in place.
Yes. So kind of in that example, the bigger rocks are the things that you need to focus on, and make sure that you have a plan for, right? And then, the other things, the smaller gravel and then the sand at the end, that's kind of the other things that our spending plan is, just crucial to make sure that you've got that covered, again, avoiding lifestyle inflation, things like that. But yeah. And then what is kind of the last little do here?
Another little trick that a lot of people overlook are tax shelter opportunities. So you have retirement accounts typically through your employer. A lot of employers are even allowing part-time employees now to utilize them. And what a tax shelter means is that as your money grows, you're not paying taxes on its growth. And in some cases, you can even get it out tax-free. That requires some special circumstances. But having the power of letting that grow without paying taxes every year does add up. So employer plan is one of them. You've got health savings accounts. 529s is one option for children.
Yeah.
And they've got even more attractive recently with the new rules that have come up with the Secure Act 2.0. We'll have to talk about those sometime.
Yeah.
But all of those allow you to grow some money tax-free for a purpose. And as long as you use it for that purpose, there's some really great benefits of doing that.
Yeah, and the thing is, if we're thinking about our life as a jar, right, and we're trying to fit in all these different things, right, then retirement or health, and the amount of money that we spend on health throughout our lifetime and education, right, so college, those are three huge rocks.
Yes.
Right, so those are the kind of the things that we need to be, mindful of and looking to do as tax efficiently as possible, and that's exactly what these tax shelters are meant to do. So, yeah, great tip.
So if you have cash burning a hole in your pocket, that's a good problem to have, but make sure you're doing the most with it so you're not left with remorse later.
Yeah, and investing according to your time horizon can be a game changer for you, but it could also require a higher skill level than what you're used to, right? So if you don't have the will, skill, or time to do it, then give us a call and we would love to assist you in that process. That's a wrap for us today. Don't forget to subscribe to our YouTube channel and our podcast so you don't miss any of our encouraging content each week. Thanks for listening to Talking Sense. And if you like what you hear, make sure and subscribe to the podcast to get all the newest episodes.
The Jim Wealth team is available to you 24/7 at info@getreadyforthefuture.com. Or you can call our offices at 866-653-PLAN. That's 866-653-7526.
And while we like to have fun here, we're also financial advisors, and that means disclosures. You should personally consult a financial advisor before making any investment, and no strategy can assure success.
Jim Wealth Financial Advisors is an Arkansas registered investment advisor with securities offered through LPL Financial, member FINRA SIPC.